Learning from the community is like there's not just a one way to be successful. There's too many ways in real estate that you can achieve your goal. Even like remote real estate, you have to have a really reliable property management team and also having a general sense of the market.
Let me introduce you to Zhiwei Wang, a tech professional and remote real estate investor who's built a rental portfolio across 2 states, all while working full-time and raising a young family. What makes Zhiwei's story even more remarkable is how he went from owning a single townhouse to investing out of state in markets like St. Louis, all during a time when most people were stuck navigating sky-high property prices and a lot of uncertainty in the market. In this episode, Zhiwei shares how he transitioned from stocks to real estate investing to diversify his income, his blueprint for building a reliable remote team without ever leaving his home, and the simple system he uses to add one property to his portfolio every year. Let's dive in. Welcome to the Hybrid Real Estate Professional Podcast. Today's episode features another spotlight of our Remote Real Estate Academy community members, Mr. Zhiwei Wang. Zhiwei just closed on his second out-of-state rental about a month ago and his third overall rental. So without further ado, I want to introduce Zhiwei and get into your story a bit. Kind of just share a little bit about yourself, where you're located, what you do, and kind of how you got into real estate.
Sure. My name is Zhiwei. I'm currently based in a little out of Seattle in the suburb of Bellevue in Washington State. So I kind of started my real estate investment naturally when I started with my first condo property. We bought it like in 2015 in the Seattle area. And then it was pretty like a 2-bedroom small condo. And then it got pretty quickly a lot of equity once it's gained in its value. And then I was thinking like, hey, like this might be an interesting thing since like we're just like paying our mortgage. And then eventually when we get our house in 2019, that property become a rental. So it kept being in the rental for 5 years now about. Then I joined the community about a year ago. And then I was trying to expand my portfolio into a remote real estate investment. And then I think talking to you and Nathan back then, that was very like enlightening moment for myself. I learned a lot from the community, how to do like a mortgage remotely, how to find a real estate agent, and then brought me naturally to the St. Louis area. And I got my first rental property back in 2022. And the second one just closed out in 24. So both of them are renting out today. So I'm happy sitting remotely and then collecting rents.
I love it. So you started with was it a townhouse or a condo?
Yeah, that place is like a pretty big condo complex, but individually it has a mix of condo and townhome. The unit that we got was just a townhome.
Yeah, so that's amazing. You know, a lot of people that aren't familiar with Bellevue, that's a pretty difficult area to afford anything. And so when you were able to buy something back then and hold on to it and then not only use it to live in for a few years, but you were able to keep it as a rental and buy another home and then rent that unit out. And that's no small feat in King County, which is one of the most expensive and difficult places to find any type of investment that makes sense. But then it sounds like the intrigue caught on and you wanted to look out of state at what your options might be. And, you know, kind of how we think about remote investing is that when you open up the entire map, all of a sudden you can find options for any price point, any strategy, and the skills that it takes to go learn and build your own team and plug in to a new market. Once you learn them, you can apply them anywhere.
Exactly.
And so you had this cool advantage because you're in one of the more expensive, sought after counties in the whole country, but then you're also able to leverage the income that you're able to make and, you know, the equity maybe that you had from those houses to start your own remote journey. Kind of share, like, how did you get the idea of having real estate be part of your financial future for you and your family?
Yeah, so it's kind of interesting that I worked as a technical program manager in a mid-sized technology company. So most of my income will come from, besides cash, it will be like stock. So naturally, you know, the stock market is doing pretty well in the past few years, but there's a little piece inside of me of saying, what if, right? And then like diversify is always the good way to go. Instead of like go all the way into like ETF or like index fund, I'm thinking of like potentially also diversify into the real estate investment as well. And I did some of the education myself, talking to a few of my friends and also listen to podcasts and YouTube channels. I do see that it's a good option for a lot of people, especially people working in the tech industry. So getting the depreciation on the like tax bucket, those kind of options are naturally a combination of very volatile, like, stock market. So that's kind of the intrigue. And also, since I already have my first rental there, give me some of the confidence to see, hey, like maybe that's one of the options. I can just try it out and see how it goes. If it's like too risky or not an optimal one, I can always back off.
And how did you come across St. Louis as a market?
So I was like trying to find out the best or not the best, like tier one kind of the investment options outside of the Washington state. I think into early 2022, I think the real estate market in the Washington state was already very high. It's very hard to get a positive cash flow. People are just getting mostly for the equity basis. Back then, I think when I invested in 2015, there was some options that you can still get a positive cash flow, but during the pandemic, it get worse, especially for like single family homes. And then I was also narrowed down into like not just investing like the very heavy HOA, like condo versus the single family home options. So for single family homes, in order to make it more like unit based, I can just pull out some of my extra cash I earned from my current job just to invest in to like one or two investment unit. I think that would be ideal. So getting to St. Louis, I think it's a very interesting, and then talk to Nathan and some of the folks in the community. Yeah, seems to be a very good option. And also it's like Nathan said, it's like a pretty boring market. So probably won't see like a lot of dramatic growth in the very, very soon compared with the area like North Carolina or Florida. But also at the same time, you won't see like a very big deep into the near future. So yeah, so it's like just some point it's like a bond that you're trying to secure to me. So yeah, I feel like it's not a big investment. You have to invest in like $1 million into that to start with.
Yeah, no, that's a great way to think about it. And it's funny because you mentioned like a lot of before you started investing in real estate, most of your investment was in stocks, and stocks have the kind of roller coaster effect, a lot of volatility. Usually over a long period of time, they grow, but the ride is pretty unstable to get there. And so the idea of diversifying into something that you have more control over, if you own a rental property and you buy it with sound fundamentals and you're good at operating it and you have a good team in place, it does feel more like a bond. It has that kind of yield that's profitable.
Hopefully.
And it has all those other benefits, right? So like when you look at a rental property, usually when I'm talking to someone who's brand new and you show them that, hey, the monthly cash flow that you get from the rental income minus all your expenses is only one piece of it. There's the appreciation on the property. There's someone else paying down your loan. There's the tax benefits. So like it's part of a bigger picture. And I think sometimes people think of it apple to apple, where it's like, okay, well, the cash flow is the only benefit you're getting. No, there's actually a lot more.
Yeah.
Because people get a little turned off by the idea. I think it's kind of a myth, the 2 a.m. toilet clog phone call. Everyone thinks that, all landlords just take calls in the middle of the night and have no balance. But
Yeah.
that's not
It's not.
that's not true.
Yeah. Learning from the community is like, first thing was there's not just a one way to be successful. I think there's like too many ways, like in real estate, that you can achieve your goal. The second learning was that you're gonna be very cautious on your like building up your team, right? Like the even like remote real estate is like you have to have a really reliable like property management team, and also like setting up the goal and the expectation. Also, I think having a general like sense of the market, I think that'll be critical.
Yeah. So on the note of building your team, so that's one area where, of course, the first thing they grapple with is the idea of investing somewhere far away. That's usually gives people anxiety. So first you have to conquer even the idea of investing remotely. Then you have to build a team that you can trust in order to reduce that anxiety. Because if you have a team that, does things in a style that you don't like, or they're not reliable, that's when you really start to feel like, oh, I made a mistake. I say that from experience because the first property manager that we ever hired for our remote investments ended up being an absolute disaster. So where I'm going with this though is, where did you, in the process of building a team, I know you worked with Nathan at first and you followed a lot of the curriculum in our community, but what do you think were like the keys to you feeling comfortable with the team that you ended up hiring?
Yeah, I would say like first I would say like talk to people who are in the area, like definitely gather as much as information as you can. I think in the community that we talked about, like getting to the Facebook groups, talking to there's like a global public forum, not necessarily like you fly there and then doing some of the work like yourself, but really like get as much as information from the internet and then talk to the real person, real people that you can have a sense of trust with. I think that will give you at least like some of the pictures on where you want to pursue next. And then secondly is like have some safeguard while the part of the team goes wrong, right? What will be the backup plan that you will trigger? I think that will give you some of the, it can be bad, right? It can go wrong in a different ways, but like having a backup plan always will give you a kind of zen in your mind for that. So
Yeah, no. So one kind of theme I hear in your answer is like multiple conversations, getting different perspectives, talking to different options for each role, and then kind of having at least a little bit of a contingency plan in the back of your head. So for us, it was, we self-managed some of our units for quite a while. And then we hired a property manager. It didn't work out. Then we went back to self-managing. Then we brought on another property manager. So our contingency plan was that we would self-manage, but it doesn't have to be that way, right? You can know different managers, different investors, or people that can help you out. And it's just, if you do that kind of upfront work to build a bit of a network in these markets, then you'll be able to navigate whatever kind of challenges
yeah,
come your way.
I think for me to start with, I didn't think of like managing myself. I'm a busy person with young kid. My kid just turned 3 last month, so I'm quite value like those time with my family. So I never think of like started managing myself, even like I think which is out of like a pandemic. So during the pandemic is even harder. So the other thing was that I actually created a spreadsheet for each of the vectors for the team members. As a program manager, naturally, I kind of, start with like different data just to see, hey, like if there are 3 options for those property management, what are the things that after my interview, what are the things I'm pay attention to? I'll give them like a score rating myself. And then maybe we have like 5 vectors, like what's their pricing look like? How are they getting things in timely? Are they passionate about getting into your business, work with you, things like that. So I give some of the ratings, like high, medium, low, and then kind of combine together. If one thing doesn't go well, I could naturally go into the second option. So that gives me multiple options when I build up my team.
Most people think I'm full of crap when I say that I can operate and grow my portfolio in an average of 20 minutes per day. So instead of asking you to take my word for it, I sat down with my business partner, Nathan, and we ran through our entire 20-minute investor strategy in a free workshop. We go through all the different workflows, software, and tools we use to stay in control of our portfolios so we can focus on what matters most to us. You can watch the entire workshop and download our workflows for free at 20minuteinvestor.com. Again, that's 20minuteinvestor.com. And back to the show. Yeah, that's a smart approach. So you can tell your professional experience is creeping its way into the way you run real estate, which is actually the entire theme of this show, right? Is that, it's for people that have full-time jobs and they have skills or income or network, something that they leverage to become successful real estate investors. And so it's interesting that you kind of apply that way of thinking into real estate too.
Yeah, partly I feel like it might be a cliche, but it's like a stoicism. You have to plan ahead and only react to like what you can control of kind of thing. So nowadays, especially in the real estate world, like things can go different ways. It's very dynamic market. Although like it's not as quick, like you have to give your time, your mindset to get prepared before things happen. I think that'll keep you winning for most of the time.
100%. And so a funny thing I'll share that I told you right before we hit record was I saw you kind of disappear from the community for like 3-4 months. There wasn't a lot of commenting and all that. And then the next thing I saw you posted, I just like went under contract, or I think it was maybe even I just closed on this thing. I was like,
Yeah.
huh? You had disappeared. I was like, oh man, maybe, he got busy or whatever. No, you were just actually hunkering down and doing the work, which,
Yeah.
I share that just because I thought it was kind of funny. But what it showed to me though, and what you explained before we hit record is that you had this goal that you want to do one property per year, and you were kind of managing towards that throughout the year. And so do you have that kind of long-term planning? Like that's going to be your continued goal is one property per year for the next 5 years, 10 years, whatever it is? Is that how you're thinking about it?
Right now, I think in the next 2 or 3 years, that's still the goal for me. Probably want to continue to invest in the area. So also like having the like since you already invest your time, did the research for the same market, also like maybe can replicate in the nearby area, maybe like Kansas City or I don't know Ohio, somewhere in Ohio, but that's TBD. But I feel like having a 1 or 2 property a year is the right pace for myself. Maybe things will change, but for now it still is. And having that goal will help me easy to navigate. Hey, like if I want to get that finished, let's say before October of the year, walking backwards, like how much property I have to, maybe every week I spend, like you guys said, like 10, 20 minutes just to research the market, see the trend, talk to people and talk to my agent, and then maybe feel 1 or 2 in every the other week. So I feel that that's the kind of the pace I wanted. And then to be realistic, I think that's also achievable for the work and life that I'm having right now.
You are using the curriculum and the program and the systems that we built exactly how it was intended, right? It was for people that have full-time jobs, and in your case, you have a young kid, right? So you have a lot of priorities that are important to you in your life, and so you don't have 15, 20 hours a week to be going and hunting deals and
Yeah.
doing all the, kind of more active investing style. And so what you've done is you've applied all this and you adopted that mentality of the 20 minutes a day, 10 minutes a day, whatever fits. And you learn how to reverse engineer. If I want to buy one property by October, well, I need to look at this many deals and I need to make this many offers. And in order to do that, I'm going to have conversations with agents. I'm going to have conversations, with my property manager and people who know exactly what I'm looking for. And then through that volume, I will get to the outcome eventually. And if you play it that way, then it's not going to take over your life and it's not going to infringe on your time with your kids. It's not going to infringe on your performance at work. And so that it's just such a good representation of how the system was meant to be used. And, people, I think, discount, it feels too boring to a lot of people, right? Because it's like, I'm only buying one house a year or maybe two. It feels slow when you're actually doing it. But then once you start the snowball rolling down the
Yeah.
hill, then, it really picks up, especially 3, 4, 5 years in the future. And if you just keep doing that, you don't have to do that in perpetuity. You could stop after 5. You could stop after 10 and just let time do its trick and continue to operate.
Yeah.
Like my wife and I own 8, and we started and for us, we're across 3 states. So that makes it a little more complex because we have 3 different teams, 3 different sets of regulations and all that. But what we found is that, at some point, the scale and just the mental clutter of having all these different things going on started to outweigh the benefit of adding 1 or 2 more,
Yeah.
right? Like
Yeah.
we hit a bit of a ceiling in our mental capacity to handle all this.
Yeah. You probably
And
need
so I
a
think,
property manager for your property managers.
which is basically what we are in this
Yes.
instance. But
You need
yeah,
an
as you
agent for
scale,
that.
it's exactly. So it starts to become bigger, and it's harder to use this kind of 20-minute per day system if you have 20 or 30 or 40 rentals, right? So, kind of Nathan and my idea when we started the academy was to reverse engineer what's worked for us, right? I have 8. He's got, I think, he had upwards of a dozen at one point, but we're not aiming for that 50 or that 100 or anything like that.
Yeah.
We believe in that approach that, you keep it manageable, you keep it fit within the lifestyle that you want to live, and you kind of build around the financial goals that you have, and you still continue to work, you still continue to invest in other assets too if you choose, and have it just be part of a diversified portfolio of cash producing assets.
Of course, 100%. I think the goal to achieve that will be benefit from the community. I think talking to members, like people are interested in syndications or there's like private equity that people can collect from to investing like larger condo complex. Right. Those are kind of things that potentially can happen. Also, like if I'm having the appetite of like just give my fund to some proper like private equity manager for the real estate investment, that's another thing that I might can explore in the next year or so. But for now, I think I am kind of enjoying the momentum that I'm having for just like very independently owning the property and gaining my knowledge and also portfolio footprint in those areas.
Yeah, I find that the type of person that succeeds with this type of approach, they do enjoy it to some extent, right? Because you're not spending, like we said, you're not spending 15, 20 hours a week on it. You've been able to build it methodically. And again, it fits into your life, but you are building something and you guys own it. You have ownership over it. If it performs well, you own the upside. You can apply leverage. That's another thing we didn't really talk
Yeah,
about, but like when you can borrow 75% of the value of the property, but you get to keep 100% of the appreciation, that's a pretty sweet deal. And especially when someone else is paying down the loan over time. So
absolutely.
it's, the feeling of having kind of built something, built a business and built a portfolio that ultimately becomes self-sustaining and then continues to grow. That feels to me better than just going and cashing my paychecks every 2 weeks. I believe there is a place for both of those things, like your career and the skills you've built, the salary, the benefits, all that stuff is amazing in its own right. But I feel better personally having also built something on the side that kind of acts as a hedge against, being too dependent on the W-2. And then I also just take pride and ownership in having built, something on our own instead of just relying on something
Yeah.
else.
Yeah.
That's how I see it.
Yeah. So I was born and raised in China. So like part of my culture was also like having a privilege to owning a land. That's quite an interesting topic, but yeah, having the ownership for those properties is another, a proud thing for a lot of Asian people just to share more. And that's why I think naturally deep inside me, I want to be part of it, part of the wave. And then also like US is a very free market. And then potentially the knowledge that I accumulate in these years can be, I can use in market in Japan, I can use in Europe someday, I don't know, but yeah, so I think it's a journey for myself for all the way. So
No, that's really cool that you mentioned that too. There's a bit of a symbolic accomplishment too. And like culturally, like you said, it means something a little different and possibly more meaningful than Americans like to take everything for granted. So, there's a perspective that you're bringing that probably most people don't have.
yeah, when
I think
I
that's
talk
really
to my
cool.
mom, I say like I'm the property owner for two other rental properties, and she said, "Wow, how did you do that?" It's like usually it's not really a cash flow market for a lot of countries or a lot of locations, but here like you can still do that because I think a lot of people are indifferent with the interest rate. A lot of people are still deciding buy versus rent, so that's a huge topic. I think here is more, but if you see like a lot of market with especially like very large populated areas, it's really imbalanced, right? If you buy it, it's like huge, you're gonna pay huge at the front, but the rent is not much. So you're just waiting for the equity to be gained. But here, I think finding the balanced market give you a lot of opportunity for that. So
Yeah, no, it's interesting. I've talked to a few different people that invest globally, like some in Asia, some in Europe, and like the way that debt markets work and the way that lending works, and the dynamics of how the markets appreciate or don't appreciate are totally different, right? And some areas, even in big cities, there's very little appreciation. So the fundamentals that we use to think of what it makes a good deal in the U.S. are quite different than a lot of other countries where they don't have a lot of the benefits. They don't have the US dollar as the reserve currency of the whole world.
yeah,
And, there's tons of, migration and population growth, economic growth, and a lot of stuff, once again, that Americans like to take for granted. But it is a uniquely advantageous place to invest compared to a lot of the other, places in the world that don't have a lot of those tailwinds.
yeah. It'll be interesting to see actually in the next few years how you look like. I feel like a lot of the information shared more quickly across the internet, and people are taking advantage for which market to go to, right? For example, the stock market for the US, I've heard like it's been more than half of the global stock market, the total value. So that's like, you can see people are moving money more directly and share the same information, share the same strategy. Like once you have like advantage players, it's gonna be, you're gonna like get, if there's no barrier of entry, there'll be a lot of other players joining. So, and with artificial intelligence, that's another topic. We'll see like how much it will change for real estate as well.
Yeah, it's really interesting to see that. So real estate is one of the funny industries where in some ways the technology is behind. There's still some like kind of legacy practices, even just the invention of DocuSign and like being able to digitally sign things made something like remote investment possible. But yeah, the way that AI is now starting to infiltrate all the different deal analysis software and market analysis and being able to compile different things. You can have a conversation with ChatGPT and
Yeah.
feed it information about a market and just ask it questions and get like conversational type answers. And it's really interesting just how much more quickly you can move and the types of insights you can pull out of the same information. You know, it's very different with generative AI and then a lot of the evolution of AI that's still yet to come.
Yeah, my picture is like in the next maybe 3 to 5 years, there'll be more automation being applied into this industry, like extending to more and more traditional industries. And for real estate, I feel like a lot of deal analysis can be automated. You can have your own like preference, set it up, and can tune the parameters for your AI agent, and then you can select the best deal for you in the area or even in the entire US, right? So having that like quick decision, so you don't have to go to one page to the next on Zillow to find out, hey, like what's up in today's market. I think that will be tremendously different for people, how people invest.
Yeah, and that's, one of the ways that you can stay a 20-minute investor is if you streamline a lot of this stuff. I know it sounds kind of crazy, and sometimes people think like Nathan and I are trying to be robots or something, and we're not. When we talk about, if you can claw back 3 or 4 minutes of time by automating something that you would otherwise be doing manual, that stuff adds up.
Yeah.
Especially when you got young kids, especially when you got a job and you got all this other stuff. So if you find little chunks of time to claw back through technology and systems or delegating, and you can find 1 or 2 hours throughout the week, well, then you can spend that time either with your family or on your other priorities or on higher value activities like building new relationships. Because I think what happens, especially once you get to 3, 4, 5, 6 properties, is there's a lot of administrative work that can come along with that. And if you're not careful, if you're only spending 20 minutes a day, all of a sudden you're spending all that time on administrative stuff instead of, actually the fun part. And so our kind of general rule is if it is repeatable and it doesn't involve any decision making, then it needs to either be delegated, automated, or eliminated. It doesn't belong on our plate.
Yeah.
If it fits those criteria.
Yeah. One thing I did want to add is like, don't let that get into your daily, like day-to-day mindset. Like sometimes you feel like, oh crap, there's like a $4,000 repair, it's just gonna hit, right? And then you're affecting your psychological happiness for the whole day, and then you're in the low mood and impact your family, I think that's like the bottom line. Don't get those things get into you too deeply. It's just one line of investment. So having those preparation, like I mentioned earlier, and also like practice on, hey, just spend like a box time every day, make a decision, maybe together with the right team, right person, right people you talk to, so that give you a head of the game. So nowadays, it's just like a million things every day people are dealing with.
It's a good call out. I mean, it's really, really, really hard not to be affected when you have some big expense pop up or you got a tenant getting angry and threatening this or that. I mean, it's pretty hard for me not to be affected in those situations as well. But you're right. I think generally, if you zoom out and you take a broader perspective and you think about this is one thing happening on one day at one property in this course of my entire, portfolio of things I've got going on, not just my real estate, but my whole life. If you zoom out, it usually gives you enough perspective to say, hey, this too shall pass. We'll get through it. We'll work through it. If you build systems and teams the right way, like you said, if you have reserve funds set aside, if you analyze the deal with enough, contingencies and allocation for repairs, then you got to just trust. You got to trust the system you built and the teams you built and let it do its thing. And like you said, there's no sense in letting it just totally derail and ruin your day and then affect your relationship with other people too. So that's a great call out.
Yeah.
So I think let's cap it here with what would be your advice to someone. Put yourself maybe 3 years ago before you started investing remotely. They're interested in investing remotely, but they're not quite sure. What would your advice be to that person that's kind of on the fence?
Yeah, I would say like continue to talk to the community. Like if you don't have a community, join one and then talk to a few people. There's other sources. It's not just like a one-way street. Like you can publish some of your ideas, just test it out, get verified with the crowd, right? And then slowly, like you have a trusted realm of people that you really can talk to on this topic. And secondly is like you can. I personally like to write. Usually, it's like a WAP engineering project plan, or this is like your investment plan, right? So you put down your first step, second step. What if things go wrong? What are your backup plan? And then maybe share with the group and see how it looks like, right? And then having people to review that. And then the other way is I also like replicate some of the existing successful story, like people talked about. That's gonna give you a very good, like you can jumpstart from the beginning. I think that's a good getting to the door of the real estate investing. The second thing, I feel like psychologically, you have to be committed into this, your objective. I started setting my goal for like one property per year, but also you want to go slow, you can go like 2 property per year, or just aiming for just the first property and see how it goes for some time. I think that's like just set up aside of that funding to say, hey, like this is going to be the funding for the investment. I'm going to use that for the property for the real estate investment. And then started looking and then see how all the options for those portion of the fund or investment going to be look like in the few years. It can grow in 10% a year. It can grow in 5%. Like do those projections. That'll be very useful for you to really get into the weeds and mindset for that. So yeah, so I'm actually very happy. Sometimes you don't see me very active in the community, but I did pop up and look at how people are talking about things. If there is a topic that I'm very interesting, I will respond as well. But at the same time, I have other channels that I'm listening to.
It's so nice. And yeah, I really appreciate all the feedback and your engagement. And I was so excited when you popped back up and you said you closed on your second out-of-state rental. The advice you just gave is great. And I think a couple of themes I heard, right? Like leaning into community. It doesn't have to be our community. It doesn't have to be a paid community. There's communities all across the internet, various social media. There's Facebook groups. There's Bigger Pockets. There's a lot of different places that you can interact with other investors. And you use that and you get their perspectives, and that can help you, understand if you're on the right track or not. Not reinventing the wheel. I think I heard that, right? So like this has all been done before. Mm-hmm. So finding people who have done what you want to do and more or less just copying either by, if they have a course, you can take their course, or if you can just find a way to mimic what they've done, you can do that. And then, it sounds like you're numbers driven too, right? You paid attention to the data and like what could this look like over a long period of time, and just understanding what you're getting yourself into and use that to kind of conquer some of the anxieties. That's great. Yeah. Great advice for any new investor. Thank you so much for coming on, and we will have to have you on again in maybe 6 months or so, and we can kind of see where you're at in your journey.
Of course.
Awesome.
Thanks, Aaron. Nice talking to you.
Thank you for making it to the end of today's episode. As you may know, podcasts are very difficult to grow organically. If you're getting value from today's episode, I'd deeply appreciate if you can take 30 seconds to leave my show a 5-star rating and review. This will go a long way to helping me reach more listeners just like you. Thank you so much in advance.